Today we're going to be presenting Nautical Landing at Bradford Village, a really exciting waterfront opportunity up north of Boston. We have here today with us Ben Marshall and Al Mendelson, who are leading the project. They're going to tell us everything about the build, the construction, timelines, what's exciting about the area, and why we love it. Whenever we look at a project, we look at the area. We want to make sure that the tailwinds are good. There's strong growth in the area, that there's going to be a market for the product. The second question that we ask ourselves is, does this project fit our skill set? We want to make sure that our interests, our skill set, and the project align. Lastly, we want to make sure that we're getting in at the right price. In the rest of the presentation, we're going to explain why we're doing all of those three on this project. Moving on to the sponsor introductions, we have Al Mendelson, who is a South African native, but has been living and developing in the States for over 4 decades. He boasts a significant portfolio of his own, has been managing them for a long time, but also has experience in other asset types as well, has built up corporate headquarters, build outs for Starbucks, directed development at Aubon Pond, and knows the area and construction extremely intimately and extremely well. Our other partner and sponsor on this project is Ben Marshall. Grew up in Albany and has been living in the Massachusetts area for over 25 years. During that time, he's been a GC, gaining valuable construction and management experience. He's also founded and successfully exited on several companies during that time. Ben is also highly educated, as is Al. Ben did his undergrad at Columbia, where he studied chemistry, has studied real estate, finance, and investing at Harvard, and recently completed his MBA at Yeshiva University. I'm going to turn it over to Ben to tell us a little bit more about the project and how it's an amazing opportunity for the Bradford area.
Thank you very much, Moshe. So what we're working on in this project is a riverfront project. We're building 48 condominiums, and we're doing them, if you're looking at the bottom left of the screen here, we're building 3 separate buildings. Each building has 16 condominiums in them. Combined, it comes to 78,000 square feet of construction. So it's a larger building. It's not huge, but it's in that larger space. Of the 78,000 square feet, which includes the first floor garages where the parking is going to happen, 50,000 square feet is net sellable space. In other words, 50,000 square feet is a portion to the condominiums that we're going to be selling. The condominiums that we're building are large 1+ and 2-bedroom units. Al can talk to it for a second, but he's done some really fascinating things. When we took over the property, it was permitted with 48 condos, but the room layout and the layout of the overall of what was going on inside the condos themselves was not maximized. And Al dove right in and has done some incredible work being able to take condos which probably would have had a hard time selling and turning them into very, very strong assets. Most of the units have river-facing decks associated with them. The river out here is a very highly utilized resource. There are 6 incredible penthouse units and a work-from-home space in every unit. There's an amazing amenity package going with this, and the reason we're telling you about this stuff is not because we're selling you these units, but because we understand that what you're looking for as you're investing are units that are going to sell well. So the amenity package includes adjacency to 2 very large marinas. We'll show you where they are on the map later on. We have a dock on premises, so people can keep their own boats right here, keep them at the marinas, come pick up people at our site. There's a bike trail. It's called the Rail Trail that connects this property all the way down into Boston. So I can bike from my backyard in Brighton all the way up to this property. There's a gym on site. There's a dog park on site. There's indoor bike storage on site. There's an Amazon package room on site, covered parking, 15 electric vehicle charging stations, and an elevator unique to every building. Al, do you want to talk about the timeline? for the project?
Sure. Good morning, everybody. We've just acquired the parcel in 2025. It's a parcel which sits waterfront, as Ben just mentioned, on the Merrimack River, which is incredible for folks that are not familiar with it. The Merrimack River is an incredible waterway that is about a 20-minute boat ride to the Atlantic Ocean and Newburyport from the site. We have we've closed on the land at this point. We intend to we're permitted to start construction at this point. And being waterfront, this is a pile project, which means that they are going to be pile driving underneath the ground beams. And that will commence at the end of this month to start the process of construction. And by the late summer, fall next year, we'll have the first building weather tight and encapsulated for folks to be able to walk through the actual units. Pre-sales are going to begin once construction is commenced, which will be within the next month. The expectation is that substantial completion will be in Q2 2027. We are under an order of conditions from conservation and the town that we have to finish the entire site before we can occupy it. So we're rushing this as a three-phase build, but we're going to build it all in one. First investor distributions are in the third quarter of 2027, which is when closings will commence on the sales. And Ben can speak about those financial arrangements more deeply in a moment. But I think it's really important to understand that what we've tried to do in the design here is design units that are very contemporary to the way people live their lifestyle today. The units have been altered from the original design to encapsulate thoughts of home working, offices, entertainment, ease of coming, ease of going, putting washer dryers in the unit, good closet space, place to put laptop computers, and then also unencumbered space to be able to see the views.
Oh, is there anything about the floor plans? So if we're looking at this bottom left floor plan, yeah, you've got the two bedrooms showing there. For those of you who aren't, we'll go slowly through it in case you're not used to looking at floor plans. The second bedroom, the one to the right of it, has this sort of half wall. What are you trying to do there? Why did you do that?
Well, what we've done is we've tried to incorporate a place for somebody to be able to keep a desk if they wish to use this as a study. We've also made this a functional optional wall over here so that this entire space could be encapsulated as entertainment space open plan, which is a very contemporary way of living. On the other hand, we could have this as a bedroom, as a guest bedroom with a second bathroom over here. And this could be then a bedroom for a guest. But if somebody was working from home, this wall here was considered a wall that we would, in this particular design, keep as a flexible space. And then someone could be working at a desk over here. And then on the prior slide, Moshe, can you go back one slide just for edification? I just happen to have a drawing here. If you look at, I'm in this drawing here at the top left corner of the page. We redesigned this whole space over here to make it functional so that this space here becomes one where you could have a desk, you could have an eating area, you could have a home office, and many other things. You could have a pull-out couch arrangement for a sleeper, for a guest, and so forth. And then we've made this corridor such that it can be shared between the bedroom and it could be shared for guests privately, so that this area can be shut off for the bedroom, and then this area could entertain. If you were having guests, they could walk into the bathroom. So there's a lot of thought gone into how we make these units function more effectively for lifestyles. Thanks. You can just go forward again. Thanks. But the other thing which is very important to understand is looking at this elevation on the right. When we originally took over the project, these were going to be one unit, all of these. And they were going to be two-story units, which we really didn't feel was optimizing the return on the project. So I redesigned those spaces. And now what we have functionality of this being one space and this being one space, which means that we've effectively got ourselves 6 front units now. And increase the revenue on the project and also the functionality of the building so that people have river-facing units as opposed to limited people having riverfront-facing units, which we think is a great asset for the project.
Thank you, Al. I learn something new about the design and construction every time I hear you talk about it. It never gets old. Before we jump into the numbers, there's one more question I have. What's required to make the project a success is pre-sales. If you don't mind telling us a little bit more about why that's so important and how that really helps the investor as well.
Yeah, so the pre-sales is very important because we're going to give people options. We're going to set up a sales trailer somewhere in this area over here. And it's going to be in a safe location that somebody can come and actually touch, smell, and feel the river and where everything's located. The why for pre-sales is very important because we're going to be starting off at an incentive selling price. Once we start the project and it commences, people will be able to buy up their finishes and increase their choices in the pre-sales office, the red box in the left bottom corner. But why that's so important is because it also increases the revenue to the investor. Because when people purchase customized finishes, you traditionally pay for those at point of order. So the revenue is directly increased by people having the choices of customizing the units, and it also makes the units more valuable in the pre-sale numbers because the numbers then become more expensive to the buyer, and of course the return to us as investors is an exponential increase.
Thank you, Al. Ben, I'm going to turn to you. What do the numbers look like for the project? Can you tell us how things break down for us in terms of costs and eventually the end of the project where we've finished all the sales and made our money?
Absolutely. Al, I love what you're doing with the annotations on the slide, so I'm going to steal a piece from your playbook. All right, so the first thing that happens, the money's coming in. We build these projects and we do the pre-sales. We have sales coming in, money starts coming in. So what's the first thing that happens to that money? The first thing that happens is the preferred return. This is money, 9% simple interest gets paid to the investors first before anyone else takes anything. So that's the first thing that happens. Eventually, we get to a point where there's enough money sitting around, and this is by the end of the building of the construction and sales of the second building, in which everybody is fully returned their money. So every penny you've put into the deal, you've got out of the deal. Your risk is off the table. You've made your 9% on your money, plus you have all of your capital back. But there's still money left over. So what happens to the money that's left over? Well, that money that's left over, because there's more profits to be shared out, gets split up 50-50 between our team and our investors. Just a simple divide. 9% preferred return goes to the investors. 100% of their money gets off the table at the end of the second building, and then we split the balance 50-50. So for every upgrade that happens, if you're the investor, right, you're getting 50% of that profit that's coming at the very end. What's the timeline of that investment? Well, to get all the way to the very end, to this point here, is 2.5 years. But we start seeing money coming back, this 9% preferred return starts paying back at month 22, so before the end of the second year. And cumulatively, over the course of the whole project, if you were just to take your money in, it's calculated at a return of 31.3%. How are my annotations working, guys?
Yes, they're working.
Okay, good. Okay, so it doesn't mean that that it's a 31.3% it does mean that it's cumulative over the life of the project. So let me just show you what that boils out. So first and foremost, IRR, internal rate of return. The internal rate of return is the average compounded annual return an investor earns over the life of the deal. That is a great way. It's my favorite way to compare one deal to another, as long as you adjust it for risk. The next term we put out there was the MOIC, the multiple of invested capital. That's a very simple way to say if I'm putting in $10 million, and my multiple of invested capital is 1.73, then I'm going to get $17 million at the end of this project, or $17,300,000. Preferred return is the return is the money that preferentially, that's the word preferred, goes to the investor before anybody else is taking money off the table. That creates the earliest form of cash flow. And obviously, the earlier you get your money off the table, the lower risk it is because you're taking the first money out of the deal. So that's your preferred return. Let's use an example investment. You decide that you want to invest $200,000 into this project. In month 22, you start receiving checks for your preferred return. As you go from 22 to 23 to 24, the checks start shifting from only preferred return all the way up until it starts becoming part of the equity that goes along with the sales of the condos. Ultimately, your $200,000 is now $346,000 in your bank account by the end of 2.5 years. That's how the deal works out. That's the timeline of the cash flow. Moshe, did that answer the question?
That does simplify it and sort of put it into real terms. I'm curious though what the timeline is for getting this project started.
Absolutely. So we started the capital raise last week. We didn't go to our the investors who we generally work with. Somebody came to us and said, we really want you to present this project. We're very excited about it. And it's gone gangbusters since there. So we rushed and we said, uh-oh, let's get out to the guys who we know we've worked with before, friends and family, all that type of stuff. Let's make sure everyone has an opportunity to get onto this deal. Started last week. We've raised a significant amount of money up till now. The total raise that we're raising is $3.5 million. The total amount that the project requires is $5 million. We are moving quickly. We expect to totally fund this deal by the end of August. So if you guys are interested in doing it, please let us know so we can protect that slot for you for your investment. I know it's hard to find good investments. It's especially hard to find good investments where you know the people who are doing it and you trust them. And we want to make sure that we give you the opportunity to get involved with this one. The next step would be after you see the webinar is to give either myself or Al or both myself and Al a heads up, and we'll go through everything in far more detail. We're gonna, go through all the numbers, go through our assumptions, so you can see exactly how we've set this up.
Thank you. Ben, I had a question about the minimum investment size. We have it listed here as $100,000. If someone's doing this, for the first time, how do we want to approach that? Is there any way someone could get in for a little less, or is that a hard minimum?
No, I think that as we've done on all of our projects, if someone is new to investing and they want to just dip their toe in the water, they want to get involved, but this is more than they're comfortable doing. The reason we have the minimum investment is because if you have too many investors, everything gets really tough to work with. But if somebody wants to try out a new project and get involved, so reach out to me or Al, and we'll talk to you about it. We'll see. We'd love to have people involved. What's most important is that people do have their accredited investor status. That's the legal hurdle that people have to be able to invest with us.
All right, thank you. So Ben and Al, we've gone through the 30,000-foot view of the project. We've brought up a lot of interesting numbers, close to a 2x return, 31%. How did we get to those numbers? Because these units haven't hit the market. What sort of research have we done to project the outcomes that we're telling people?
Oh, so much. Al, I don't know if you want to talk about this whole concept of the broker opinion of value, but this took a lot of time and energy to make sure that we had numbers that we trusted.
At firms we've dealt with, I think it's important to understand is we didn't just come up with numbers. Are what we consider the 4 leading entities in the business that would be appropriate to sell a project like this. And on the left of the screen, we've listed their names and who they are. Some of them have got millions of square feet under their belt of sales that they've done. And then in the middle of that slide, Hatteras Point is probably the only project which is comparable to this one, even though it's a couple of towns away and it's several years older. That project sold out originally between $600,000 and $800,000, and resales are now taking place at about 100 to 1 million full. There's been a huge surge of demand for that project, and the prices have gone way up. It's a very similar project, but all of these are waterfront projects that are comparable. The interesting fact that comes out of this analogy, which was done by third-party brokerage firms that were interviewing to take on the position of sales for us, is that they all came up with a very similar price per square foot and price per unit, which is right within line of what we had projected the project to be. The price per square foot average is about $680 per square foot, and the price per unit that they came out at was about $660,000. Obviously, that would be an average unit because the penthouses we have are 1,300 square feet. They're very large. They're substantial units with substantial space, very luxurious. Those are going to be selling at significantly more money than those unit prices. The projected sellout number of the $32 million is a very conservative number based on using that average price per square foot or price per unit that is shown in this chart. And that's how we reached that number of $32 million, which is a clear understanding of how the project becomes so profitable between the construction costs and the selling price. And all of this is expected to be in under 3 years. About 25 to 28 months is our projected timeline for completion and sellout for the project. And even with what many people have asked me is, well, the price is so expensive to build at the moment. Well, the most important part is we control that because between myself and Ben, we have a tremendous experience in this industry, having built many buildings like it. And so we will actually CM the project ourselves, and where we get general contractors involved, they'll be directly responding to me to keep control on the numbers and manage all engineering workouts and valuation of better improvements of products and so forth to keep the numbers down. In fact, we're doing full valuations of all kinds of options at the moment to come up with better facades and so forth.
Thank you, Al. I wanted to ask you another question. So looking at the price point, we're about at $660 per unit on average. Who's buying these units and where are they coming from?
Well, from what we've gathered, it's a buyer demographic which seems to be a moving target, but it seems right now that it's going to be somewhere between professionals and empty nesters, because the situation is that this project is situated waterfront. So it's going to be a boating community that wants to be on the water, wants to fish, wants to boat. You're 15 to 20 minutes from the Atlantic Ocean from our boat slip. And the empty nester equation is one that there are no real luxury condo options for someone who wants to live in this area and wants to live in a turnkey situation. The early verbal interaction we've had with clients and brokers is that the demand is very pent up for people to exchange their older homes for a newer condo and have the opportunity to stay in the area at potentially a lesser price, and then travel with the knowledge of knowing that this is turnkey. So this slide is really helpful to the selling demographic as well, because as I said earlier, this is the Merrimack River. It's actually the tail of the Hemigewasset River out of New Hampshire. But so what's important to understand about this river is that this is a tidal river coming out of the ocean in the back here. This is the Atlantic Ocean. This is Plum Island over here. And this water flows all the way back up here. So when you leave our project, this is our site over here. When you leave this project from our dock, we actually have 2 docks approved for the site. When you leave from our dock, you're about 15 to 20 minutes to Newburyport, to give you an idea. This waterway is an extremely fertile waterway. It's full of fish. It's full of incredibly quality water. And in fact, right here, Massachusetts Conservation is doing a sturgeon study at the moment, which tells you how healthy the water is. There's a breeding ground over here for sturgeon, and I met with the people that are running that study as much as I laugh about it, but they're studying the sturgeon egg-laying population in this area right near our site. So that tells you how healthy the water is. So I think somebody is going to come to this project, going to be an empty nester. It's going to be a professional. It's going to be an option for someone who can't afford to get into the housing market, who wants new construction. And it's going to be very strongly demanded by people that have a love for the water and boating. We're going to be able to keep a boat in front of this project. So they've got two major yacht clubs that they can go to, the Crescent and the Mariana Marina, which is here. And those two yacht clubs are permanent yacht clubs with full services for boating, both automotive and yacht, to somebody who happens to be a water fanatic. The other very important part of this project is, as we touched on earlier, is this is the rail trail, which runs through here and goes back down into lower Massachusetts. And what's really important to understand, it also leaves from here and it goes back up through Amesbury. It runs all the way up here to Newburyport, and then you can split and go to Salisbury over here. There is a Y in the trail. And believe it or not, the only break that's left on this is our site. This is actually the break in the rail trail is where we are. So the city is very supportive of us getting this finished. Why? Because the rail trail will be completed, which is an incredible asset for our project. So somebody can jump on their bicycle, they can go south from here, or if they wish, they can go north, and they've got multiple options where and how far they want to ride. So in summary, I think the buyer pool is going to come from several markets because of the demand. And there's only 48 units. And I think for investors to understand, Ben has probably made this clear in the numbers, is these are 3 projects of 16 units each. This is not a massive multi-year project which is going to go on for 10 years. This is going to be a short sale with a high demand. And what's very important for investors to understand is that by the time we finish the second building, or if we get to about 32 sales, this project is sold in terms of its cost. At that point, there's no more debt on the project. So from a security point of view for investors, it's very important to understand it's a highly motivating factor when trying to invest in projects that are not stacked with debt and have to get to the end to make a profit. This project only has to get to about 66% before being fully profitable.
Thank you so much, Al. I just looking at this graphic here, I love the fact that we're on the water. I've always loved the water. And as we all know, real estate is local, but I also think it's important to take a step back and recognize that in some ways this is a long-term project. And to that effect, we've done some research into the Northeast in general, and we want to make sure that the markets are still going to be good in a few years' time as we're coming to sell these units. Ben, do you want to tell us a little bit more about why the Northeast is a great place to be at this time?
Yeah, absolutely. Thanks, Moshe. Market tailwinds is the phrase we use to mean that the project we're doing is going to continue to do well, even if other things don't go our way. So if construction costs go up, or something else strange happens that we're not predicting, and strange things happen in every project, that the market is pushing this project towards something much more profitable than what we're currently expecting. The number one and the biggest thing in Massachusetts, as everyone who lives in Massachusetts knows, is that the housing here is really, really old, and it's hard to get a nice new house. My wife is from Texas, and when she first saw our first apartment that we rented, she just laughed at me. She said, there's not even air conditioning here. What are we doing? And that's a common thing in Massachusetts, that you don't even, like, forget a dog park for amenities or an Amazon package room. People don't even have AC. Here we're building, new construction is essentially zero energy construction. It's silent, it's beautiful, it's comfortable, it's everything you ever want, and it comes at a premium. But if you take a look at this slide, Massachusetts is not permitting new projects. They've made it so hard. If you've ever tried to put an addition onto your living room in your own house, you know that it is impossible. It's a huge process to get a project permitted. But here we have 48 units which are permitted, ready to go. There's not going to be a lot more permits coming in after us because we're in Massachusetts. It's very, very hard to get things permitted here. There's too many special interest groups, too many hindrances to do it. So the simple fact that permitting is slowing down our competition, great, big strength to us. And then there's a second part to it. The second part is that even the projects that are getting permitted aren't getting built. There are, in Massachusetts uniquely, there are so many of the few permitted projects are getting built because in the process of getting permitted, the city comes and they say, hey, if we're going to give you this permit, you got to give us back something. Now, as Al and I know just too well, the guys who are trying to get these permits are not good at reading those documents. They agree to all sorts of things, and some of those things kill a project. A lot of those things kill a project. The city thinks they're being very clever by getting their pound of flesh in order to get the permit out in the street, and in the end, all you have is a project that can't get built. So the gap between what's actually getting permitted and what's getting built is huge in Massachusetts, and it's only getting bigger. That strengthens the fact that as we come to market, we do not expect to see any significant amount of competitive product coming to the market. If people want these condos, this is what's going to be available to them. If you want new, there's only a few. Take a look at what we've got.
That's a great tagline. If you want new, there's only a few. We're getting towards the end of the presentation, and I just have a few disclosures for you. Ben, if you don't mind running through these, obviously none of the numbers, projections are guaranteed. We do our best to make sure that we're in line using our experience and knowledge of the area to make sure that the numbers we're projecting are as accurate as possible. But we'd be remiss if we didn't tell you that there are risks in these types of projects.
That's right. We've all lived through COVID. We've all lived through all sorts of weird things that happen in the market. We have to tell you about them. You're an investor. There's no investment which is risk-free. Number one, we have market risk. That is an issue that we always have to take in mind. Number two, there's financing risk. Even though we have our finances in place, it could well be that when we go to sell the units, like we have to decide where are the interest rates going to be when we sell them? Maybe they're going to skyrocket, but maybe they'll come down. If they skyrocket, it's going to be harder for buyers to buy the projects at what we're estimating to be the sales price. Liquidity risk. In that scenario, now we have to hold on to the property longer. It takes longer to do it, and therefore our interest goes up and our profit goes down. Regulatory and zoning risk. We are fully permitted. We don't expect to see any more regulatory and zoning risk, but we're doing work on the side of the river. The Environmental Commission is involved with what we're doing. It's definitely something to keep in mind, not to mention the things that we don't even know that we don't know yet. Hopefully we know it all, but it's always a learning process. Every construction project is, every development project is a learning process. Anyone who tells you something otherwise just hasn't done this long enough. Operational and maintenance risk. There's a lot of things we're going to be doing. Things do break. We don't know what's going to break. Hopefully, and we try to pass all of that risk along to the subcontractors who are doing the work. That's just something we don't know. And lastly is the macroeconomic risk. There are so many broad economic factors, including inflation, recession, and shifts in commercial real estate trends that could impact what we're doing. There's a lot that we don't know. There's a lot of risks in the market. We think that by this being a shorter project, we've reduced the scope of the risk. The longer a project goes, the greater the amount of unknowns that can get involved. It's a 2.5-year project. We're hoping to be done even sooner, but But this is where we're at on the project, and these are the risks that we foresee at the moment.
Thank you, Ben, for running through those. Just as we wrap up, I want to reiterate some important dates and figures and ways of getting involved in the project. I took this slide out initially, but we've had a lot of people come in using IRAs and retirement funds. Ben, if you want to just, summarize our dates and figures and maybe give a minute or two to tell people a little bit more about the potential ways that they can get involved in the project.
Yeah, a lot of people are jumping in using what's called a self-directed IRA account. You can take it, and this is really a interesting way to boost your returns because it minimizes a lot of your tax liability on this project. Um, Totally something that Moshe, you've done a lot of research into. If anyone watching this wants to learn more about how to use their IRA accounts, you won't be able to use the same account. It's not going to be your Schwab account. That's going to be what's a self-directed IRA. You'll have to move it into a separate account, but also an IRA account. You're never actually withdrawing the money from the IRA world, so there's no tax issue there. Um, but this is it. I mean, we're actively raising. We're going to make sure that if you guys want to use some of those funds, we know it takes a little bit of time to do it. We will make sure that we're flexible with you. But we do need to know that money's coming in, and we do need to know that how much money it is. So this way we can get you started on that process. Um, that's it. The first time you do it, the first time you set these accounts up, it just takes a couple extra weeks, and we need to be moving on this project because the winter's coming.
All right. Well, then, Al, that concludes the presentation portion of the meeting. I wanted to thank you for your explanations and your deep dive into all the details of the project. I'd like to use the next segment and open the floor up to anyone who has any questions. If you want to pop on screen and say hi, we'd love to hear from you.
Hey, Ben, Al. This is David Khalif. First of all, thank you for the presentation. Very helpful. I'm just a little bit curious on I didn't catch all of the amenities at the beginning of the call, but my understanding is that there's young couples that would be potentially buying these kind of condos and then an older population. So can you just talk a little bit about maybe why the specific amenities you have included would appeal to those groups? And I'm just trying to figure out from a value add, like what would stick out versus other condos that you see for similar pricing?
Yeah, so it's really interesting. As we were doing the final layout design of everything, we were talking to all the different sales groups who were trying to get this, and we said, what would make it easiest for you to sell this? And the big thing that kept coming up was eh, everybody now in these demographics, their pets are a huge part of their life. And to be able to, they wanted two things. They wanted covered parking and they wanted close access to a dog park, a place where, so we knew they could walk their dogs wonderfully because you're right on the rail trail. But what about a dog park? Why is a dog park so important? This is, you're talking to a guy who grew up on a sheep farm, so a little bit out of my wheelhouse, although we do have dogs. But a dog park is so important. To have a place which is fenced in where you can let your dog run off leash is a really big deal to dog owners. And we are putting one right off on the side of the property. So there's a fenced in dog park coming in on this. Um, Huge part of it. Moshe, do you want to run over to the slide that has the different amenities on it?
Sure.
I think it's also important while you're doing that to understand, David, is that you asked about why the different categories of people that would be interested in this project. One of the things is I think all age groups are these days dealing with the concept of unlimited time availability. And what comes to this project is you have these beautiful decks over the water, which gives you an outdoor area, well, a controlled outdoor area, but then the maintenance-free lifestyle has become something that people really like. And having something which is unusual in New England, which is being able to exercise from your own property, is something which many people have commented on. And I think that's an ageless amenity which very few buildings can offer. You can go for a walk or you can go for a ride. And if you ride a hybrid, you can ride that type of bike. And if you so care to wish on a road bike and you want to do 30 or 40 miles, you can do that too. So I think it offers all of the above as well. And then as I try to touch on, the fact that we're waterfront means that it's very difficult because today, as you know, many successful people are younger and own boats and want to go fishing for many reasons out on the ocean or even on the river. And so you get the amenity right in front of this that you can jump in a boat and go to different locations. And then,
we never talked about proximity to restaurants and stuff either.
well, it's funny you say that. That was the one thing I was just about to say is for both younger and older people who haven't, I'm not sure where you're from, David, but if you have knowledge of the North Shore, you know that if you can go 15 or 20 minutes and park your boat at Michael's or any one of the luxury restaurants in Newburyport, of which there's dozens to choose from today because Newburyport's become this hub. It's fantastic. You can get in your boat at Railroad Street and you can ride up 15, 20 minutes in a very, very beautiful ride up to Newburyport, and you can go and have dinner and come back and park your boat. So these are all multiple amenities which are very unpredictable of whether it's going to be a 60-year-old or whether it's going to be a 30-year-old.
No, that's very helpful. I appreciate the context there. Makes sense.
Sure.
Also, they have the downtown Haverhill is actually it's an attraction in and of itself. There's good restaurants right here in the just a few minute walk from the site where I put the X is a market basket. So that's a huge, wonderful supermarket for fresh fruits and everything like that.
Walking distance, yeah.
Walking distance, yeah. So you have everything. I mean, here's a Rite Aid right here. There's a Dunkin' Donuts right here for people to get their coffee. Like, there's all sorts of easy ways for people to just go out on foot, enjoy it. And then at the bottom of the screen, you can't see it. That's where the T stop is. So it's just on the other side of this bridge. So people can walk right there and get to where they want to go if they don't want to have a car. Tons of parking, EV charging, everything that I think that the people are going to want, but there will also be some people who don't want to have two cars. So.
And a small follow-up, if that's okay. I'm curious, when you get the units permitted for this 48 total, is there any requirement that one of the condos has to be like an affordable unit? Does that eat into the overall margin on this deal, or can all 16 be sold at market rate?
Yeah, we're fully permitted. There's no affordability requirements.
Okay, awesome.
So we are permitted. What we're pushing on right now is not permitting. It's getting started with the construction. Everything's lined up. We own we have the property. We're good to go. We're just trying to raise the equity, get all the construction funds in one place, so we can hit the races and get everything built before the winter. Not everything built before the winter. It's going to take some time, but get the construction really roaring before winter
Get the
time.
piles in and the foundations.
Yeah.
Thank you. David, if you have any other questions, feel free to just call Ben or I. We're happy to run through it with you. We've had other presentations like this, and we find that people come up with questions after the presentation, and it's been very productive if they just call us directly. Happy to continue the conversation with question and answer, or you can email if you wish.
Yeah, we find a lot of people will come to these webinars and then we'll reach out and say, we have a group of people that wanted to do it. So then bring it back to their group. They set it up with Motion. We sit down with that individual group and can really go through everything. Obviously, you'll share or whoever wants can share this webinar with the group, and then we sort of drill down on what their questions are at that point.
Yeah.
Hi, Ben.
Hi.
Hi, it's Malka. How are you?
Good. How are you?
Good. I'm sitting with Lady. Great. This looks amazing. It's a really wonderful project. Question: how close is like the closest like luxury condos to this?
Apartment. So it's really. Can you go back to the opinion of value? So there are luxury condos, apartments. So everybody wants to build apartments right now. So here's the question: home ownership or rental, right? If once you go to ownership, so everybody wants rentals. So all the developers are putting in rental properties. There's luxury rentals going up right on the other side of the bridge that we were looking at the bottom of that picture. here the brokers were challenged and said, what comps to these condos? And what I would say is, Malcolm, with your background as a real estate agent, we should share with you these, and to anyone watching, we'll share with you the broker opinion of values where they bring out all the comps, everything which is relevant to see how they came up with these numbers. It's really important. It's understanding the basis for these valuations. And each of these four different groups took a different strategy in coming up with it. So it's interesting to see how each one from their own angle with their own strategy, came up and said, this is where we think it's going to be. And they all ended up in the same place, which was cool.
I think it's very important to understand is that there isn't a DOM, days on market competitor that's sitting out there directly competing with this project, because everything that is of any significance is 100% sold out and in resales at this point. So you're giving people an opportunity, as I said earlier, to buy at the beginning prices at the 680 plus square foot. And one of the things that's important to note to answer your question is Hatter's Point is probably somewhat the closest competition, and it's a few towns away north of us. And that project's 100% full and is now turning over at somewhere around 400,000 more than its original selling price. They're listing units between 900 and a million, 4 million, 350, and they were selling originally at these numbers that we're coming in at. So
right, so that's not weird. It's not super weird in Boston, but it is weird if you're in Texas to say like you can buy an older condo for more money than it cost when it was new, where everything really depreciates.
Talking about Boston, I think it's important to note that when you look at the Boston prices, we're cheap.
Yeah,
we're at the bottom end of the food chain. If you get into Boston, your numbers are $2,000 to $3,000 a square foot when you get downtown. When you get out here and you look at our numbers, it's an extremely affordable option for somebody who can't afford the Boston market to still have a place where they can buy new.
Right, and they can't even afford the Newburyport market.
Correct. Newbury's much more expensive.
Yeah.
Where are the buyers for this? Where are they working? Like what are the industries that are out there?
So it depends on who you're talking to, and it depends on which firm of the broker opinion of value, which of their strategy that they looked. But Moshe, would you share the folder with Malka that's got all of these? I bet she's gonna love reading through. Each one really to be clear, we didn't turn to 7 different brokers and say, give us the 7 broker opinion of values, and we're only going to put 4 in. We only turned to these 4 people. We just put it out there exactly the way it is. And this is where it came in. But each one has a different idea. You know, the guys at Foundation Brokerage who come more from the New Hampshire bit, we're talking about people coming from southern New Hampshire into the area. The people from Evo who sell a lot of condos over in East Boston. We're thinking about people coming from Somerville and different demographics. Land and Sea Real Estate is someone who really concentrates in the Merrimack Valley. And was saying people are going to come from Andover with selling their 3,000 square foot house, going into a 1,000 square foot condo, depending on exactly where it is. But it's an interesting read.
Interesting.
I think the other thing which is really important to understand is that these studies are all brand new. None of these are aged. These are virgin studies that have just been done. We're not depending on stuff that's been done in 2024, 23, or pre-COVID or anything like that. These are live studies that have just been done. Very important to understand the difference, because when you do a market study in a fluctuating market, one of the things that many developers do is they find the best numbers and then use that to project into their investment brochures. We don't do that. We use live studies that are a month or 2 old, which are absolutely live. Anything that's prior to that, which we did have records of, we never use those as hard facts, because we feel like the information's only as good as today.
Thank you. Another just I came a little late. Just want to know, This project, is this something you guys picked up, like it was in process?
Yeah, it was fully permitted, and we picked it up from, and the person we picked it up from is still involved in the project. So he's just a junior partner without decision authority, but his investment's still part of the project. So he's part of the GP team.
Move forward. I see like Al redesigned some things that makes it much more profitable. Was it not profitable for him? Like he was just gonna let
He
it go?
he couldn't make it happen, right?
He couldn't, I hear. Okay.
Folks, we are just getting up on the hour, and I know it's a busy day right before a weekend. Don't want to hold you for too long. I want to thank everyone who joined the call. I want to thank Ben and Al for presenting today. And if you're watching this at a later date, I want to thank you for taking the time to watch this presentation through to this point. If you have any questions, I'm going to throw up a link right here. It should pop up on YouTube that says reach out to Moshe, Ben, or Al at chestnutriver.com with any further questions. I'll have a link over here for booking appointments with us. That being said, appreciate the time and have a wonderful day and weekend.
Thanks, Moshe. Bye, everybody.
Thanks, everybody, for attending.